All right, so welcome back to another WISE community short video going over some stuff in the stock market. We're going to talk about stock splits, and the reason why we're talking about this today, right now, is because of the fact that you'll see just a little while ago, today, March 9th, Amazon announced a 20-for-1 stock split. And on top of that, they announced a $10 billion buyback plan of their own stock. This is huge news. Even if you can see here, it went up 7% in the after hours. It closed Amazon. Actually, I think I have it right here. They closed at 27.85. They're up to 2,900, up 183 points in the after hours. So we're going to talk about this, what this means, what is a stock split if you don't know, how does it affect the stock, and what does that mean for Amazon? So we are going to do that right after we do this. If you want to support the channel and learn more about building wealth, join us at thewisecommunity.com. WISE stands for Wealth Inspired Student Education. Our community is a group of people looking to change the current economic system by helping everyone get financially educated and achieving financial freedom. Members of the WISE community receive a monthly newsletter going over our top stock and crypto picks with other investment news. You can get free stocks by signing up with trading brokerages using our referral codes. Get discounts on all our classes and courses that we run. And we organize a weekly cash flow game, which helps our members increase their financial intelligence by implementing wealth building methods in a fun, interactive way. But the best thing you can do to support the community is hit that like button and subscribe. It's free. It only takes a second to do, and your interaction helps our videos get seen by more people. I also read every single comment and love to respond. And if it's a really good one, I'll put it in the next video. All right, let's get back to it. So what exactly is a stock split? All right. Well, what a stock split is it's basically a company. Mathematically, it doesn't change your investment in a company. All right. So it's basically a company. All they're trying to do really is make their stock price lower without lowering the value. So what do I mean? So let's say Amazon, just for the sake of math, let's say Amazon was $2,000 a share. It was actually $2,700 a share at the close today. And let's say they were at $2,000 a share. They did a 20-for-1 stock split. So that means now, instead of if you had one share worth $2,000. So if you had Amazon, if you had one share of Amazon today, and let's say it was $2,000 to make the math easy, now you would have 20 shares, right? Your one share turns into 20 shares of Amazon, but each share would only be worth $100, right? So 20 times 100 is 2,000. The same thing as one share times 2,000 would be 2,000. So the value hasn't changed, right? But you now have 10 shares, right? So a stock split, so that's why mathematically doesn't mean anything, because you still have $2,000 worth of Amazon stock either way. What happens though is when a stock splits, what it does is it does a couple of things for people. Number one, what it does is there are some benefits. Like one is that you now have full shares. So let's say somebody comes in and they're a new investor, they don't have a lot of money to start off with, and they're like, well, I want to buy Amazon. So if they look and they go, Amazon, how much is Amazon stock? I heard about Amazon. They're good. $2,700. Now it's $2,900. I only got $100 to invest. I can't buy Amazon, right? So you won't buy Amazon. But if it was $2,000 and it was a split, it was a 20-for-1 split. Now it's $100. You say, okay, well, I have $100. I want to buy $100 with Amazon. Or if you came in and said, look, I have $3,000 that I want to start investing, and all of a sudden you're like, well, I could buy one share of Amazon. That's not exciting. Doesn't feel like I'm really about one share of something. I'd rather I want to buy like 5 different stocks and that are, $50 a piece or $20 a piece or $100 a piece. So it's because it's so expensive, I don't buy it. So it entices more people to come and buy the stock, even though the value of the stock is less. So if you bought one share at 2,000, after the stock split, you're like, oh, I'm buying a share at only $100. Where I had to spend $2,000, last week, but you're still only getting 1/20th of the value of what is, because there's more shares out there, right? That's what a stock split does, right? It's 20 times as many shares that are in existence. So bigger companies do this. Now, the good thing about this is it doesn't entice people to come buy. Now, a lot of people will tell you that are in the stock market, they go, it doesn't matter because fractional stocks exist now, and where in the past it didn't. So you could buy fractional stocks like with Webull, for examples, where I buy my fractional stocks, or with Public. Look down in the description if you want to look into those brokerages where you can buy fractional shares. So a fractional share just basically means, like, if you had $100 and you wanted to buy Amazon when it was at 2,000, let's just say, you would just buy 1/20th of the stock, right? And so if the stock went up 20%, your 1/20th would go up 20%, right? So it's the same thing. But the thing with fractionals is if you do buy a fractional share of a stock, there is a benefit to being able to buy a full share of a stock, because let's say you don't get to vote. If you have fractional shares, you don't get to vote in the shareholders meeting. So on things that when they have shareholders votes or proxy votes or whatever, you can't vote if you have fractional shares. You need to have at least one full share to do that, which is important to some people. Also, it's easier to make covered calls, right? Like I like to do covered calls, but yeah, in order to do covered calls, if you don't know what covered calls are, it's an option type of play, and join the W.I.S.E community, you'll see some videos on how to do covered calls. But if you want to buy 100 shares, it's tough to buy 100 shares because you need 100 shares to do a covered call. It's tough to buy 100 shares if they're $3,000 a share, but if they're $100 a share, yeah, I can get it a lot easier, right? So these are benefits for a company to do this. And Amazon has not done a stock split like this since like the 90s, like since the .com era. So this is huge for Amazon, but all the other big companies do this. You know, Apple is really big on doing this. They do a lot of stock splits. They just did one though, 4-for-1. Now they did 4-for-1 because they do stock splits a little bit more often. It's not like very often, but a little bit more often than Amazon hasn't done one in like 30 years. Google, which is also known as Alphabet, did a 20-for-1 years ago. Tesla did a stock split. They probably will do another stock split once this little dip in the market goes away. So these stock splits, what they also do is they are very bullish. It means the company believes that the stock is going to go up, right? If you think your stock is going to go down in the future, you don't want to do a stock split and bring the price even lower, right? Because when people see low prices of things, they think, it's cheap and it's not working and the company is not good. But even this stock split they just did, you see on the new, the stock went, it closed at 27.85, and in the extended hours, it's at 29.69. So it's been going up and up because of this announcement, because it is a bullish sign that a company is going to do it. Now, also on top of this, Amazon did a buyback, right? $10 billion buyback. So with that buyback, what is a buyback? Well, here, I looked it up for you. A stock buyback, also known as a share repurchase, occurs when a company buys back its shares from the marketplace with its accumulated cash. Now, a stock buyback is a way for a company to reinvest in itself. The repurchased shares are absorbed into the company and the number of outstanding shares in the market is reduced. All right, so let me put that in English. What that means is when a company, if you think of why does a company even go public in the first place, right? Because they're trying to generate money, right? They're getting investors. You are an investor in a company. And so they say, okay, we're going to IPO, initial public offering. We're going to offer our shares to the public for money, right? So when it comes out, it says, hey, we're going to split our company into 100 million shares, all right? And if you want to buy them, they're $10 a piece. So if every single person buys a share at $10, at 100 million, that's $1 billion that we have in cash, right? That we can get, right? So, and then the shares get traded as people buy and sell. That's what makes the shares go up and down. But the company only makes money when they either sell the shares out, or now what they're doing, what this is, reason why this is a bullish thing is what Amazon is saying is like, we don't need money, right? Which they don't, right? So Amazon's like, we don't need the money. So we are going to buy back our shares, which shrinks the number of shares that are out there, which means the price will go up, right? They're more valuable because there's less of them. So, supply and demand, right? The more there is something, the less valuable it is, right? So Amazon is not only saying we are bullish on our company because of the fact that we are doing a stock split, but we're also buying back 10 billion with a B. That's a big number, dollars of our shares. So this is some very bullish news. The stock should go up on this news. We'll see what it does in the long term. Well, in the long term, we know Amazon's going to be great. Right now, I've been saying for on my TikTok and on the other channels here, Amazon was way undervalued at 2,700, and this is the time where you should be looking into investing. This is the bargain basement on a lot of stocks right now. So in part 2, I'm going to be going over a little bit more about this stuff. And if you're in the WISE community, and we're also going to be going over another company that I invested in the if you want to see the WISE public portfolio where I buy stocks and share it with our community, check us out on at the WISE community. All right, part 2 coming up. See you later.